Ladies and gentlemen, welcome back to TMP Finance, where you make long and short-term investing simple. When I tell you that this is probably going to be the most in-depth video that you've ever seen for the NASDAQ, and also the most efficient too, you probably will say that, hey Alex, you're not wrong. And I'm going to show you where I expect the NASDAQ to go within the near and the short future, and I'm also going to talk about the MAG 7 stocks and the direction that I expect them to go, and to what price I believe they can go down to. So without further ado, let's hop straight into it. Today on the NASDAQ, we were currently down 2.03% in the open hours of the market, 2.2% down for our futures market. Very ugly day here. Nvidia is down 4%, Palantir is down 8%, Tesla's down 5%, Amazon, even though it had good earnings, is down 2%. So what am I saying here? Well, I just believe that the market is starting to cool down. And last week I told you to start, trimming down on your tech holdings. Not sell it all, not short the market, but just take some profit, because we've made, and as I said just a couple seconds ago, we've made some massive progress within this past year, within the past 2 or 3 years. So that being said, right now is a great time to take profit, because every 3 years you typically have a bear market. I'm not saying exactly on the 3-year dot that's when the market is going to shift over and you're going to lose all your money. No, I'm just saying that that's typically when investors are looking for kind of a trend change. That's when things typically happen. And right now it's a little bit overdue. So right now within the NASDAQ, what's holding us up within a bull market? Because we still are in a bull market, technically speaking, even though you have pullbacks that by 2, 3, 4%. That is still a very healthy part of being in a bull market. So as soon as you start to break below our support levels, I'm taking a look at our rising support level, or our 600 support level, which is also a psychological level. If we do break below these, that's when we're looking to go down to our lower price targets over here. Now let's just take a look. Where can I expect the market to go? Well, technically speaking, every time that we do pass a psychological level, we typically want to retest the one below it. For example, when we break above 200 over here, let's say, we go to 300. When we move to 300, we want to go to 400. When we go to 400, we want to retest right back at 300. And then the same thing here. When we pass 400, we want to go to 500. Then we retest 400, the psychological level before. So that being said, we're currently at 619. The highest that we were able to go is 637. I think that we're due to come back and retest at least 540, if not 500. 540 was a very obvious and a very important all-time high that we had back in 2024 and 2025, and we haven't had a retest at that level. That being said, as the economic conditions are starting to slow down and kind of in a negative way, you have job openings that are very few. You have unemployment that's getting a little bit higher than wanted. You have inflation that's 1% higher than anticipated by the Federal Reserve. And then you also have the Federal Reserve and Jerome Powell, who are trying to, kind of balance things out and try to make the economic situation a little bit cheaper for your average American by cutting down on interest rates and cutting more than they even want to. You have Jerome Powell saying that he's not very confident, or not that confident is the word, but he's not very optimistic about making another cut within December. But right now, the market is starting to slow down. You have stocks that are very overvalued, like Palantir, that's trading at 600 PE ratio. You have other stocks in the MAG 7 that are in, the hundreds or the very high, 80s, 90s. And this is when the market's going to start to roll over. You've been in this extreme bliss, ecstasy within the market, within the long-term scope. And I definitely think that it is time for us to start slowing things down. So as soon as we start to break below 600, I do think that we can at least come down to 540. 540 again, previous all-time high that we probably will retest. And why also 540 here as well? Well, let's just take a look at the gaps within the NASDAQ. The NASDAQ loves to move and refill gaps. And this gap over here at 529 to about 536 is right about where 540 is. So using multiple tools of confluence, I can try to come to a better conclusion than just one tool, of course. So that being said, 540 has a very nice chance of getting retested, because if we zoom out and look at all the other green lines that should be showing here that represent gaps within the past of the NASDAQ, we can see that they're always getting filled. So that being said, I do believe that we will come and at least fill 3 out of 4 of these gaps. There is a chance that, maybe we don't do it perfectly because the market is not exact, it's not that precise, but there is a chance that, maybe we don't fill one, but we'll fill the others. So I think that 529 or this 540 level can at least get retested. If we don't hold this, then I'm looking for 500. But I think that either one of these, especially if you're looking for, bullish moves off the NASDAQ, bullish move off these support levels, these could be very good buying opportunities for the NASDAQ to continue moving higher. But I think that 500 will probably get retested, especially if we do have a very ugly bearish breakdown. So that is my look for the NASDAQ. If you are looking to short the NASDAQ after we break our significant support levels, you can be looking for these tickers over here. PSQ is going to give you a 1 times leverage for shorting the NASDAQ. QID is going to give you a 2 times leverage, and SQQQ is going to give you a 3 times leverage. Now, what are the downsides to holding these kind of ETFs? Well, the main one is going to be that you do have a bit of decay. So for example, let's say that you were to get in a little bit earlier, and I'll just grab my drawing tool over here just to display this better. Let's say that this date over here represents January 1st, and this is where you start shorting the market. And we come all the way down here, and then we come all the way back up and we recover after the bear market. But we have this kind of neckline that shows where you bought. And let's just say that this represents the normal QQQ. So this would be the normal QQQ, no leverage. Now let's say that you were to start buying these inverse ETFs. You start selling these or buying these inverse ETFs. What that's going to look like is going to be like this, where you can have, and I'm just going to grab my drawing tool here, change the color. You start to have this red line, you start to make a little bit more money. That's great, but the time that it takes to recover if you're a little bit too early is a little bit more. So the NASDAQ, you might not make as much money if you are poorly timing your trades within the same amount of time. However, if you are very calculative about it and you wait for good confirmation, there's a very good chance that you could be making a lot more and receiving a return very soon. But there is that chance that you do have that decay that could be kicking you if you start selling or buying these inverse ETFs too soon. So that is my my kind of take. And I do believe that at least the 560, you could get a very good short if we break below 600. But let's take a look at a little bit more in depth. I want to talk about the XMAG ETF, which represents the MAG 7 stocks within the NASDAQ. And I also want to talk about the opposite, which is the XMAG ETF. So we have, our MAG 7 and our XMAG ETF. With our MAG 7 ETF, we can see that all the major stocks within the index, which is Amazon, Google, Apple, Microsoft, Tesla, and Meta, if I haven't said, Microsoft, if I haven't said, but the main 7, nvidia, all those stocks are compiled into this here. And we can see that we're kind of, past this halfway point within our support and resistance level. And I do believe that as soon as we start to break below this rising support level, that's going to be a very obvious sign for you to come be looking for these lower price targets over here at $58 or whatever the NASDAQ's saying, again, at this 540 or 500 zones over there. If I'm taking a look at the XMAGs, we can see here that we've actually started to break down as soon as today. We started to break below those support levels over here. So that's showing that you have a bit of weakness, that the major stocks that are holding up the NASDAQ 100, the major 7 stocks, those stocks are holding up the market while you have, another 93 that are pulling the market down. When you start to have that much breadth in the market, it goes to show that it's not sustainable and that bulls and bears are not on the same term. So as soon as that bubble pops, and I hate to use that term bubble because it's so overused, but I like to sprinkle that word from time to time. When that bubble does start to pop, NVIDIA gets poor earnings. We already have Meta. We already have, Microsoft that had not very strong earnings. That's when you're going to start to see, not just the XMAG, but the MAG 7 ETFs start to fall down as well. So we already do have a warning sign from our MAG 7, our XMAG ETF, and not our MAG 7 yet. But soon, I believe that will start to follow, and that's when you can be shorting the NASDAQ and get very good confirmation. Now, let's move on to our other individual stocks within the NASDAQ. Let's take a look at Tesla over here. We can see that Tesla is making this kind of cup and handle shape here, where we're just getting this handle to be formed over here. It's not looking too strong for Tesla. Now, if we did break above this higher high level at 467, so about 483, then that could be extremely bullish for Tesla. This is probably the most bullish stock setup that I could possibly see within the MAG 7 stocks, where if we do break above this massive zone here, we could at least see about $600 a share. But with Tesla, what we can also see here too is that we do have this potential resistance line that's starting to form above. So even if we did break above that, I believe that this will be a very big selling point for a lot of Tesla bulls. So if you are looking to take a very high, a very good risk to reward position on Tesla, what you could be looking for is either a break of this critical support level over here at 413 to come back down to 360, or you could be looking for a touch of this support line over here where we could gap up, let's say, in the pre-market, touch this and get a very strong rejection down, sitting at about $510 a share. So that's what I could be looking at when it comes to Tesla. Let's take a look at NVIDIA over here, and NVIDIA is not looking too hot. Let's just take a look at the weekly chart over here, and it's not looking too strong. You have the weekly, and this is a horrible pattern here, when the weekly chart, it opens up at a new high, and it can't hold that, and it starts to kind of make this very long, ugly candle down. Not a very good look for NVIDIA, and again, this is our market leader, so as soon as this starts to go, as soon as it starts to slip, that's when you're probably going to see the rest of the stocks within the Mag 7 start to slip as well. But right now, your critical support level for NVIDIA is going to be at 184. If we can't hold above it, and again, within a bull trend, there's really no reason for us to break below this, but if we can't hold this level within this short trade over here, and I explained from 184 to 164, that is going to give you an 11% return. And from the top of the market, where we can at least guess is a top, to where I can expect to take profit, that's a pullback of 22%, which is very possible as well. Let's take a look at Microsoft, and this is probably one of the ugliest charts on the Mag 7. That being said, well, why do I say that? Well, if we take a look at where the market has made these very high points, these are just very big exhaustion gaps. It's formed a big exhaustion gap from here and here. It's formed a big exhaustion gap over here, and that's typically telling you when the market is starting to slow down. So that being said, considering that we can't really see a lot of bulls intraday want to buy at these levels, it's probably not going to hold too well. So your critical support level is right at this neckline, right underneath this 500 psychological level over here as well. If we can't hold that, I can expect to come down to 469 and potentially retest our previous all-time high that was very strong back in 2024. So that is my outlook for Microsoft. I still believe that all these companies here, aside from maybe Tesla, are definitely strong buys within the future, but just not a strong buy as of now. I definitely think that we will start to see a little bit more of a pullback within these stocks. Let's take a look at Google. Google over here, not a very nice look as well. You have a lot of exhaustion gaps here. You have a very strong breakout from our channel over here, where we have moved from that breakout, we've moved a total of 17%. Which is, enough. That's definitely enough for us to start, kind of change sentiment here. You can see that we're trying to fill gaps within Google. If we can't hold our break over here at 257, I think it's very possible that Google could come down to as low as 225 or even 215. When you do have a gap from a new all-time high that has never been explored previously, price is going to want to come back. Even if it's, a freak move where the NASDAQ or where Google dumps 20% and recovers, you're going to see that gap get refilled in the future. This is a massive stock. And with a stock like this, you typically see a lot of congruency within, the entire market. If other stocks are looking to fill gaps, Google's definitely going to. It has such a large market cap, and it's definitely one stock that a lot of investors that are, major investors, Wall Street investors are looking to buy into. Let's take a look at Meta. This is the weakest of the Mag 7 right now. Meta has dumped quite a bit here. And if we take a look at the highest point in Meta, we can see that we've fallen over 21% so far. You do have this rising support level over here at Meta. This is going to be the first place that I can expect you to buy, not anything in between, where we are starting to rise ever since the end of the bear market in 2022. This has been where the market has kind of, come down to its lowest points and rejected from. So I believe that that Meta could come down and touch at these levels over here, and this could be a very good buying opportunity. Again, I don't think Meta is going anywhere anytime soon. And if you actually do take a look at the RSI, which we will pull up right now, we can see that we're currently sitting at, let me see here, I'm just going to close one of these. For Meta, we are currently sitting at 23.92. And if we take a look at the last time we touched these levels, you're looking all the way back at like the 2022 bear market. If that, so let's see here, yeah, about 22, yeah, so you're pretty much at this 2022 bear market level. So you are looking to be very oversold in Meta, but this allows for great buying opportunities. Not just yet, because we are still moving extremely fast down. Taking a look at our Bollinger Bands, we are right underneath our lower band here, and we retested that and we got a very strong rejection. So that's showing us we're making lower lows and getting these rejections off of our technicals. That Meta is still looking to move down a little bit lower, especially after this large miss, where I don't think that's still the correct figure, but I definitely think that Meta has a little bit of a ways to come back down to. But that is my outlook for the Mag 7 here. Now, what are some buying opportunities within the market? I'm going to tell you, typically there's a lot. Typically I have like 50 stocks on my radar, and then I choose from the best one. But right now, what I'm looking for is very few, and the only one that really stands out to me is Berkshire Hathaway. Now, why Berkshire Hathaway? Well, because Berkshire Hathaway consistently beats the NASDAQ. It consistently beats the S&P 500. So even at times where you do have bearish pullbacks or bear markets within the NASDAQ, sometimes Berkshire Hathaway is not even affected or it even makes new all-time highs. That being said, we're seeing a lot of buying after Berkshire Hathaway got great earnings. Berkshire Hathaway is also holding 1/3 of their money in cash, waiting for good investment opportunities. So who knows, maybe they buy into these Mag 7 stocks that are very undervalued in the future, and they make massive gains from that for their clients. But right now, what I'm looking for to kind of, draw the line in the sand where the bulls are starting to get into is going to be if we break above this falling resistance level over here. So if we do break above, I want to say about 495, that's going to be very apparent for you to start buying Berkshire Hathaway. And from there, Berkshire Hathaway is always making new all-time highs. I think it's very possible that we could come up to at least 560. But that is my outlook for Berkshire Hathaway and my outlook for the NASDAQ. So I hope you guys are able to kind of get an understanding of what indexes you could buy, what ETFs you could buy, what stocks you could be keeping an eye out for when they come down to critical support or even the take profit areas. And yeah, if you guys are interested in learning how I'm currently beating the NASDAQ by about 900%, come take a look at that link in my description, wap.com/tnp-finance. All of my trades are made public there, and you'll get the take profits, stop losses, and percentage risk allocation for every single trade that I personally take. So thank you very much for tuning in, and I will see you soon. Take care, y'all.